Hello, I'm Julia Dreblow. I am the founder of SRI Services, and I'm going to talk you through very quickly basically an overview of what sustainable investment and related areas like ESG, etc. cover and how they operate. So there are four main issues that we look to cover here. These are environmental, so things to do with wildlife, nature, the planet, etc. There are social issues, things to do with people, diversity, inclusion, human rights, etc. There's governance, there's the ways in which companies are managed, all important, including how they manage environmental and social issues. And then ethical issues also, things that are to do with personal values, which, being honest, are often also regarded as being social issues. So things like tobacco, armaments, etc. have both social implications and ethical implications. But personal values, of course, hugely important, and to some extent where this area came from. Now, there are three different approaches that fund managers or investors can take to these approaches to these issues. One is to avoid stuff, to stay away from things that people don't like, or that a fund manager has said they won't invest in, also called negative screening, exclusions, etc., different words. And then you can support those things that we think are good. So investing in companies doing really decent things, basically directing capital towards positive companies. And then the third is to try and change existing companies, to engage with companies, to encourage them to make progress, to manage things better, or whatever that might be. Now, that's also called stewardship, responsible ownership, lots of different terms that people use for describing engagement. And then overall, if we look at the function of investment markets, there are two real world things that investors can and should be focusing on helping to deliver. One is directing money towards companies that are doing great things. These companies are also often referred to as solutions companies or enablers of change. And the other is to work with existing companies to help them to improve, to transition to being greener, more sustainable, reducing carbon emissions, basically encouraging progress amongst existing companies and helping new companies to grow and expand and deliver services we'll be needing in future. And then the final point here, just one conventional thing that we've got to always remember, these are investments, these are about making money. So sustainable, responsible, ESG, ethical funds, etc. don't make any sense if they don't make decent financial returns. So that is absolutely central to the running of these funds also. I hope you find that useful. Be aware different funds combine these in different ways. It will always be thus. That's the way financial markets work. Different people have different views, different clients have different views. I hope you find this useful. Thank you. Goodbye.